is now the world's largest consumer of gold. This is part of the American dream is to own a home. The dream in India is to own gold.
There is about 20,000 metric tons of gold stashed away in India's households and temples.
Hey guys, today we are going to do a case study on why gold prices are rising like it is the next Bitcoin. Before that, I am a 23-year-old finance enthusiast pursuing finance as a career. I make these videos to keep myself updated about current affairs, finance in general, geopolitics and economics, and share my research and analysis with you guys through YouTube. So today we are going to do a case study on why gold prices are rising like anything. From year to date in September 2025, gold is almost up by around 31% in America and around almost 35% in India. Imagine putting in 100 grand and getting back 135 grand in just a span of 8 to 9 months, without doing anything and just letting your money grow while you sleep. So is the incredible gold rally finally coming to an end? Or is this just the beginning of a new golden era? These are the questions on every investor's mind as gold prices continue their sharp ascent. Today we dive deep into the soaring trend of gold prices, exploring the facts behind this rally and what the future might hold for this timeless asset. Disclaimer: the information presented in this video is for educational and informational purposes only. It should not be considered as financial advice. Please consult a licensed financial advisor before making any investment decisions. Now let's get back to the video. This is an all-time high level for gold, marking renewed interest from both institutional investors and retail buyers seeking a safe haven. We are going to talk about 5 key reasons that have led to the uptrend in gold prices. And the last one may be the most crucial factor affecting gold prices. Number 1 is cash inflows in gold-backed ETFs, 99% of which came from US-based funds. Gold-related markets mirror this trend. The NYSE Arca Gold Miners Index (GDX) has surged around 58% in the last 6 months. That is from around March 2025 to September 2025, significantly outperforming many key equity sectors. North America attracted $1.4 billion in July, bringing year-to-date inflows to $22 billion, which is on pace for its second strongest annual performance. While flows remain positive, they did slow on a month-over-month basis. We attribute this to a short-term rebound in the dollar and a rise in rates, as expectations for future Fed cuts continue to be pushed further out. Number 2 is volatility in global markets. Investor sentiment has been heavily influenced by rising market volatility. The CBOE VIX index, a widely followed measure of market volatility or risk, surged dramatically from a low 14 earlier this year to a peak of 52 on March 30, 2025, a more than 270% jump in just a few months. Although the VIX gradually eased afterward, this spike clearly signals that global tensions and market uncertainty can escalate rapidly at any time, reinforcing gold's appeal as a safe haven asset. Number 3 is inflation. Inflation continues to be a critical driver for changing gold prices. The US PCE index, that is the Personal Consumption Expenditures Price Index, a key Federal Reserve inflation gauge, has averaged around 2.6% month-over-month in 2025, just above the Fed's 2% target. While not extremely elevated, this persistent inflation encourages investors to turn to gold, which has historically preserved purchasing power during inflationary phases better than many other assets. Since the start of 2025, gold's price increase outpaces many inflation-adjusted investments, cementing its status as a prime inflation hedge. Number 4 is the rise in interest rates. Central bank policies remain mixed and contribute to market unpredictability. The U.S. Federal Reserve increased interest rates multiple times since after COVID, lifting the benchmark rate to 5.33% in late 23 and early 24, which finally now as of September 2025 is 4.33%, though it is predicted that the rates will be cut down to around 3.5% by the end of first quarter of 2026, says JP Morgan. Simultaneously, central banks in Europe and the UK have paused tightening measures, creating uncertainty that boosts gold's appeal as a non-yielding safe asset. And finally, number 5 is, as you guys guessed it right, is geopolitics. One of the most significant contributors to this rally is rising geopolitical risk. Conflicts in Eastern Europe and growing tensions in the Middle East and U.S. presidential elections have driven investors to seek safe haven assets like gold. For instance, this year's Geopolitical Risk Index dashboard of BlackRock almost doubled in value every time a significant geopolitical event took place. Historically, gold prices don't have a fixed percentage increase for normal geopolitical events. Their response varies significantly, with some events causing moderate increases like 3 to 8%, while more severe conflicts or instability can lead to major upward spikes, even double-digit percentage gains. Or new record highs can be seen during the COVID-19 pandemic or the Russia-Ukraine conflict. Looking forward, analysts predict that if geopolitical risks and inflation persist, gold prices could push further by the end of 2025. Conversely, any easing in conflicts or aggressive central bank tightening could slow or reverse gains. For now, with geopolitical risk indices at 5-year highs and inflation slightly elevated above target, gold's safe haven status remains intact. In conclusion, the gold price uptrend is substantiated by significant data points. Around 35% rise in prices this year, price levels near $3,470 or 1,07,000 rupees per 10 grams, an increase in geopolitical risk, US inflation averaging 2.6%, and surging investment inflows measured in billions of dollars. These factors combine to offer a clear explanation of why gold continues to attract investors seeking stability in a volatile global environment.